What is going on, everybody? Welcome on into this Friday live. We are looking right now at the S&P 500 just ripping to the upside. And as we speak, here is the daily chart on the S&P. That right there is what I think a lot of people were, I don't want to say hoping for. I think you'd have a lot of people on the other side who are absolutely not hoping for this. But I think this starts to breathe some air, or at least you can breathe a sigh of relief in terms of this kind of choppity chop we've been dealing with the past, I don't know, month and a half, or I guess 2 months, really, since the beginning of April. We haven't really had these types of big breakouts or breakdowns. We've been kind of range bound. We've been, bound by prior highs and building some higher lows ever so slightly and slowly over time. But now things are changing. So right now we got a big move to the upside. Market's up about 1%, a little over 1.5% on the S&P. The NASDAQ is not up as much, but the NASDAQ has been strong, or has been a lot stronger, has made this type of move over the past couple of weeks anyway, that the S&P is now starting to tap into. The Dow monster today. The Dow has been lagging for sure. The Dow was actually not even up towards this year's highs. And the Dow is having a big day. So we've got a lot of maybe potentially some rotation here, because we've got tech being strong for a while, market still pushing higher, but underneath the surface of tech, I believe today you've got a lot more strength. So if you look over at like a finviz.com and you pull up advancers, decliners, like looking at underneath some of the breadth, and today's a day where you've got 77% of stocks advancing, 20% declining. You've got, way 80% of stocks that are making either new highs or new lows. 80%, I guess, of new highs and new lows are new highs, and only 18% or roughly are new lows. You got about 53% of stocks above their 50 SMAs, and about 45 above their 200 moving averages, which is not as strong overall as you would think based off the charts, but that's because we've only had a handful of stocks leading the way. But if you kind of unpack things, look at this heat map today. And if I get myself off the screen for a second, it's just green across the screen, across a lot of sectors. And telecom services, T-Mobile, Verizon, AT&T, that's the only real glaring weakness. If you look back over the past month, though, you'll notice it's not so much that obvious. You look over and you've got tech doing great, but under the surface of tech, there's a lot more red and a lot more, mixed colors here throughout. And so that's not the case today. Today, definitely not the case. Actually, you see even more strength towards the bottom right of the screen, which was where we saw more red over the past month, and not as much strength across a lot of the tech. They're a lot, I would say weaker, but relatively speaking today, they're not as strong. When you jump over the tech stocks, that's the deal. That's where we're sitting right now. Here on the S&P. So we'll see if this ends up kind of shaking out into the close the same way, or we're going to squeeze out. It looks like we're kind of squeezing out to the upside. That's for sure today. If we dive deeper, IWM, the Russell, is up 3.35% or so. That is also big because this is breaking out of its kind of consolidation. It's trying to at least break out of its consolidation for the past couple of months. Past 3 months now, it's been consolidating on the Russell. That's now at the highest level we've seen since early March when we had the bank scares. So that's kind of bringing, or at least building back the upside. I think we can get up to maybe 185 or so. Something in here could be a logical spot of resistance to watch for before that big breakdown was a prior support. But yeah. So I hope you guys are doing great on this Friday. One of the things for me, technically today we had to the system, we had one red, one green trade, but I had another red trade. And the problem that I'm having, I think this is something that I got to kind of figure out as the next step. It's something that I've had, I'll talk more about in the weekend's video, tomorrow's video. I think I'll post it tomorrow, or Sunday, whenever I get a chance to post it. But when I have a good stretch, the problem is bringing that over into the next step, right? And what's the next step? Is increasing position sizing. It's, increasing that we're having more confidence, right, to take those larger, it's more so just sizing. And when you go from doing well for a bit to then saying, okay, well, let's up the size. Now all of a sudden you start upping the size on trades, but now you're like, wait a second, if I made X, Y, or let's say I made, I don't know, so you make $1,000 in a week or a month or whatever the time frame is, or it's $100, whatever the number is. And then now you start taking these trades that are now whatever the size increases, and maybe your sizing on average was $1,000. Now your average sizing is $2,000 or $1,500. But now your drawdown for like a normal drawdown is also going to be, somewhat substantially larger. You don't have to size up that much. And that's what I'm going to try to do a better job of, like not jumping too far into sizing a ton, but sizing just a little bit more, just a smidge more, adding like an extra contract or two to my average like position size of options that I was playing throughout the month of May and really before May, so that it's not a big, it's not a big jump. It's more of a gradual jump. But that's like the biggest thing, is being able to because you're going to have drawdown, right? You're going to have times where things don't work. And so in those times, is it going to be mentally too much? And in the past, what I've done in the past is I would do well for a while. Then I would have one, day or a week or a couple trades in a row that just are drawdown as I size up, which now kind of almost erases all the gains that I had previously made in the prior days or weeks or whatever the time frame I'm looking at. And that's all, again, potentially mentally. I don't have to, if I don't think of it that way, I don't have to. You don't have to think of it like that. But then that throws me off, and then it makes me do things that I hadn't done in months or weeks or, in many, many trades that I knew were not helping me. But then I start doing those things again, those things come back or new issues kind of pop up. And then that's like the biggest thing, I think. If you were to, let's say, if I was to trade one size, like let's say it was like, I don't know, $1,000 or $500 position size on options. If you just traded that one size, like I could get, and that was it for like, I don't know, years, I feel like you can get really freaking good at that. And you have dialed it in and all that stuff. But when you start adding size, when you start adding some extra things or start to, change things, that's where you're going to find some growing pains. And that's for sure. And so it's managing that, I think, is pretty important. And that's the game plan. That's the goal for the next month to see how we can do as we start to size up a little bit. That's the goal. So long-winded intro. That's what's going on here. What else? 10 years back up today. 10 years back up 2%. Let's see if we can put the daily chart up. It regained the losses in the past 2 days. 10 years back up. I wonder if the Fed potential, yes, it still says 70% chance of a pause, which is leaning towards a pause. And the Fed speaker that spoke yesterday, what was his name? Patrick. Oh, they already updated this chart. It was Patrick Harker. He essentially said, we should pause. Like, we should just pause this meeting, this coming up, and just, what's the worst it could do? Like, not doing a 25 hike. Let's just pause, relax. Is kind of what his mindset is. So we'll see. I mean, I think that the CPI, which will come out before the Fed meeting is that next week? No, 2 weeks. Not next week. The week after that, in a week and a half, I guess. That'll be kind of important. So that'll be the last piece to the puzzle, one would think, right? But here's where we start getting a little more interesting now, because we can start looking at like the fear and greed index, right? And we can start looking at, because now we're getting some good moves. Funny enough, fear and greed's actually at 65, which seems weird because I would imagine that all these signs should be pointing up. Yeah, they should. That fear and greed is weird. All the signs, this number should be popping up into extreme greed, I would think, soon. 75 plus. We also are getting pretty overextended now, or pretty extended on the S&P. It's a big move now. So going into next week, the test of 4,300 is we're close. We're pretty darn close on the S&P. So pullbacks or consolidation here would not be super surprising, like at all. Same thing with the NASDAQ. Like, this thing just made a new high technically today on the year, but pullbacks would not be insane at this point in time, because again, like, you can have like a pullback like this and then still end up going, higher, weeks later, if this is going to be, if this wants to ride up further. Now, I think a lot of people are looking at this and saying to themselves, what do I do? Because you got this S&P going kind of pretty crazy now and breaking out to the upside, and it's getting up towards levels we haven't seen in about a year almost. And well, actually, August of last year, so less than a year, but 10 months or whatever. And you're like, if I was thinking that market's going to go down, what do I do? Do I just say, screw this and double down on shorts, or do I not buy if I'm on cash? Do I just not buy? Do I not partake? A lot of people are in this, like, they have to kind of weigh. Now, some people don't really care this much, but those who do are weighing, do I get back in if I haven't been in? Do I exit shorts? Do I enter shorts? Or do I just leave things alone? And that's why I think it comes down to, like, in our view, in my view, it's like the dollar cost average approach. When you're looking at the S&P, is that's the easiest way to do it. It's going to keep the stress out of it. And if you feel scared, then you can utilize a hedge with a piece of your portfolio or with some margin that you've got from your broker to hedge your downside in case you're scared of downside. What I'm going to do, though, is I'm going to pull up the Robinhood portfolio, which, by the way, it's at like 10.5 now, roughly. Had a good week here in the Robinhood portfolio, that is for sure. Today it's down because, why? AGQ Silver's down, bonds are down, yeah, and those are decent size weights in the portfolio, so that's why we are down today, technically. I guess Soxel's down too. But here, I'm going to go into this. This is my SRS position. This is the ultra short real estate ETF. 2X. It's a 2X leverage real estate short ETF. I got 85 shares worth about $1,500. I don't know why it's not letting me like highlight this to make it easier to see. Whatever. 85 shares worth $1,500. The plan, or what I'm going to do, is I'm going to add to this. I'm probably going to round it out to about 100 shares because it's my hedge, right? This is my simple way to hedge. This is the SRS ETF. Now, it is down today. Market's up. So essentially that's that's part of the reason. The only thing that I would be somewhat semi-concerned about with this is that, or just thinking about the drawdown. So let's just say a scenario were to occur where the market rips for the next 2, 3, 4 months. I don't know. And, everyone's feeling good. Real estate maybe starts to get a bounce or whatever. It's possible that this could come down into that like 15, 14, even sub 14 range. So I just have to make sure that I'm mentally prepared for that drawdown if it occurs, or make sure that my position sizing is fine to where that's not a huge deal. So what is that going to do on 100 shares? Well, 100 shares, let's say it goes from 18 to 14, that's going to be about $400. That's not that big of a deal. And so in that period, if the market were to be that strong over that next whatever period, however long that is, my anticipation would be the rest of my portfolio would do decently. Hopefully would do decently to where I would have the $400 hedge not be a big deal. So what I'm going to go ahead and do is I'm going to go get that last 15 shares right now. I'm going to buy that at 18 or so. My average cost was actually over 19 because I started buying this earlier this week. So now I believe my average cost, if I refresh this guy, should be like under 19 or like around that. Let's see. Yeah, it's $18.98. $18.98 is my average cost now on the SRS Ultra Short Real Estate ETF. It's a 2X leverage real estate short ETF. So that's how I'm going to hedge. A pullback in the market going into one of the weaker sectors in the market right now. A sector that a lot of people are not thinking of. Now, hey, it could be a good dip buy, maybe. If the market is going to bottom and this is going to go higher for the next couple of months to years, who knows? I'm just going to hedge that. That's what I feel comfortable in hedging in. And so that's what we're going to do. So now we're good there. And there's nothing else to do here. I mean, I'm just going to get myself off the screen for a second. Here's the portfolio. It's pretty simple. For whatever reason, I just can't get rid of this last like tiny bit of Ethereum, which maybe I'll buy some Ethereum, maybe get some crypto exposure. I don't know. Maybe, but not right now. But yeah, so it's SOXL, which is we're up like 100 and something % on that, which is nuts. That is the semiconductor ETF. It's a 3X ETF for semiconductors. TMF, which is the 3X TLT. So that is my recession protection. Essentially, if we go into a deeper recession, then bonds are going to have to come. Bonds will go up, yields will go down, bond yields will go down, bonds will go up, and then TMF would go up 3X TLT, roughly speaking. So that's why I did that. I played that because TLT is not super volatile. So, 3X I felt better with. Also, I try to sell covered calls on all of these positions that I have 100 shares or more on, which is everything. so that I can minimize downside and also cash flow a few extra bucks a month. That's the plan. JEPI is the core of the portfolio. AGQ is our silver exposure. I will be shifting over from AGQ. Here it is. Here's AGQ's chart. I will be shifting over from AGQ, which is pretty volatile, to SLV at some point soon. My plan is to sell covered calls until I get taken out on AGQ. Eventually, I'll get taken out. So, for example, if silver goes on a run the next like 2 weeks, I have an AGQ 35 call that I sold. If AGQ is above $35 by the 16th of June, then I will get taken out. It'll sell my 100 shares at $35 per share. And I have an average in like the low 20s. And then I will go ahead and buy SLV. So that's going to save me a couple $100 because right now for 100 shares, this way I can still sell covered calls on SLV. AGQ is at like $29, which is essentially for 100 shares, which I have, is $2,900, so almost $3,000. And then SLV, we just looked at, is around 21, 22. So it'll save me, a couple $100 by going into the non-leverage play, which, hey, the way I think about it was I capitalized with the leverage because we ended up doing pretty well in that position. And if I can capitalize nicely, make, 50% or something like that, which I think we're somewhere around there. If we get up to that 35, great. Then I'll just put myself in SLV and have that silver and commodity, kind of exposure there. And then SRS is our just pure, I guess, hedge almost. It's short the real estate sector. There's a scenario where the market could do well and this could also do well. I don't see them doing insane. I don't see SRS doing insanely well if the market's going higher and higher and higher, but it's possible that they could both do well, but we'll see. We will see. So that's the plan. And that's the portfolio update right there. Pretty simple. I'm keeping it as simple as possible now. And then there'll be some occasional little extra little things that I'll add in. For example, this past week, if you go back to, I think it was Tuesday's live stream, it was CVNA, Carvana. So by the way, Carvana was nuts because that was an insane trade in my view. This trade I entered it right here essentially on that day of breakout. Now I did enter it up essentially at resistance. It did break that resistance technically on that Tuesday. It pulled back on Wednesday, had some buyers into the close, but because I bought June 16th contracts, I didn't give a shit. It wasn't a big deal. My stop loss was down here and my take profit was 15 to 16 plus up into here, right? So I didn't really care too much about that. And I was looking essentially on the option contracts. Once I saw 100% plus on my options, I know I got to start taking profits because it's possible that these contracts could have gone to zero if we did come back through or gone very close to zero. So my risk was essentially 100%. So my reward needed to be 100 plus, and we got 100 plus on those contracts yesterday. Then they went from, I bought them at 125. You could have got them under $1 on Tuesday when I bought them. You could have got them for under $1 on Wednesday. And then I sold my last one at, I believe, $3. And it went to maybe 305 was the high. I got pretty close to top ticking that, which is almost never happens, but I got pretty close looking back. But I saw the thing go to $17 almost. And I was like, yo, I don't know what's going to happen here. This could go for more. I'm done. It got 100 and whatever the hell percent that was. That's sick. I'm going to move on, and I don't care about Carvana. Carvana could go to zero. Carvana can go to 1 million. Who cares? No longer the trade that I really have a high probability in taking. That's it. So that was great, and that's something we did here. And I won't really swing trade. I don't swing trade in my Webull account. It's only day trades, so any swings will be small, and they'll be in here. That's the plan. So for now, no swings that we have. Just kind of more so big picture macro investment / trades or just holdings. Somewhat diversified portfolio. It is volatile. The portfolio, for example, this past, week is up 6%, which, you generally don't see a portfolio become that volatile unless you're playing some riskier things. But part of this 6% is because we had a decent, I think it was like $300 or $400 in Carvana gains, so most of this week was Carvana, and that was like kind of icing on the cake. So that's where we're at. We're chilling now though. So what's going on, Eddie? What's going on, Flippa? VIX new lows. Yeah. Future trade on MES. Nice. I've been finding that I've been doing pretty bad on any futures trades compared to options. I've been much better on the options side. I don't know, maybe it's just me, but I guess it's been because I'm playing like the breaks of respected levels of support resistance, right? I'm finding that those breaks occur much more powerful in individual stocks, which then drive the overall like indices. So then you'll have like almost a delayed reaction across SPY or let's say, ES or MES, right? Futures. You'll have a delayed reaction almost there. And then sometimes you can get a nice move and it could be big enough for where like, oh, that's going to take profit. Many times I'm finding that move isn't as large as the move that I'm getting in the individual stock, which comes a little bit earlier if you're playing the stronger stock. So that's just for me, that's what's been working as of late. But silver spot looking bullish. Let's see what silver, let me go jump over to it. I still want the exposure to it. Let's see. Daily chart. Yeah. I mean, this is a higher low for now. I mean, you could even think about this as like, I'm going to stop out on it if it goes there. That's kind of my view on it is I'll stay in even if it did dip below that level. I don't really care. My level is this. We break down below here, I'll heavily consider stopping out of it. That'll probably be like around where my entry was on it anyway. So that's around $20 or so on silver. But right now, man, that's a higher low until proven otherwise at around 2270-ish. So if 2270 holds, like this looks pretty good. So it's got about $1 of wiggle room here. $1 of downside would hit you on that level. But for now, silver, same thing as like the S&P, right? You've got higher lows and you've got higher highs. So we're here until proven otherwise, That's where we're at till proven otherwise. Carvana had a bad day at first with strength of that breakout pattern. Yeah, no, and the thing is, we talked about it on Tuesday when I entered Carvana, I was like, you're going to have people who are going to sit here and buy, this Friday's contracts. Now, I think in the grand scheme, it still would have worked. If you bought like 15 strike Friday contracts, you just would have been down like 80% on Wednesday, and would you have held through that, or would you have just said, yeah, screw it? Or would you have added to it, And so to me, it's like, you got to give things time. And like that chart on Carvana was just looking at me saying, hey, like this looks like it's ready to go this week. That was what we were saying on Tuesday. It very well may, and it did, and it may have more in the tank. It may, and it did, but what if, you had like 2 or 3 days like Wednesday, and now it's Friday, and you bought an out of the money strike price call that's now worth nothing, right? The pattern's still there. The stock is broken out of the pattern, and like it still looks good. It's just back testing right now, and it could be setting up for the next move. But you've bought a contract that took you out of the trade when the trade's still valid. That's kind of how I looked at it. And no, if you bought it, man, if you bought it on Wednesday, that would have been a deal. That would have been nutty risk reward. Because if you bought it on Tuesday, yeah, like I did, you still ended up you could have made over 100%. But had you bought Wednesday when things were a little bit cheaper, oh my gosh, man. Buy some more silver coin and bars. That would be kind of, that's something I've thought about, but I haven't actually got myself to buy like any physical silver or gold or any of that stuff. Good times, good trades, good food. That's what it's all about. Also, oil's bouncing back as we speak now. Oil's back. It didn't look great. It was down sub 70. Still doesn't look great. I mean, if you ask me, I wouldn't want to freaking be oil bull like until it gets above 83. That's my spot. X marks the spot right there. But that said, maybe it's trying to build a higher low. Maybe here at 67. We'll see. We will see. Natty Gas came back down. Same spot it's been bouncing. This is just putting pressure on that area. Eventually, 2 is going to go. Nat Gas does not look good. It's got these weird bounces we've been seeing, but I just would be careful with that. As we've said in the past, Bitcoin still downtrending kind of for now, but off the short-term time frames, really since like April, but still doesn't look bad. Could easily just be building a higher low here for more. Outside of that, let's see. XRT retail bounce back. Funny enough, I exited the retail short. I exited my oil shorts all like literally on like the best possible day this week. And I bought January contracts for next year, just to get out of like I had some put debit spreads, just to get out of the put debit spreads and go into just a straight hedge of shares instead of options on an ETF, essentially a leveraged inverse ETF on real estate. SRS is what I decided to do. I just thought it was cleaner. It was easier. I didn't have to worry about time, and it is what it is. Like that's it. The only thing that I will say is not concerning, but the only problem I'm going to have with the SRS ETF is if we jump over here, I don't believe the option chain is great. So I'm not going to be selling covered calls on this thing, most likely, unless I want to go out and if I go out to June 16th, for example, they only have monthlies. The 25 strike covered call, there's no volume, 23 open interest. The 20 strike covered call, no volume, 54 open interest. The 18s, no, there's no volume on these, essentially is what I'm trying to get at. 10 contracts on the 19s, but no volume. So I'll do, and maybe it'll work, is like every, couple of days or weeks, I'll just go and sell like a way out there. I'll just put a line in the water. If someone bites and that's it. But it's not something just for fun. It's not something that I'm expecting to be selling covered calls on. That's the only concern, not concern. That's the only downside of it. But yeah, just got paid $32 from Zoom. There was apparently like a lawsuit for, I don't know if anyone else got that like email or whatever, but apparently it was like Zoom got like sued or whatever, and maybe there's some privacy information or something like that they had leaked. And I guess I was a Zoom user the past couple of years for school back in the day, back when I graduated, was like the beginning of the pandemic essentially. And then after that, so I got $32. I did nothing. I just got an email. It was like, hey, like you qualify. Like, do you want this? And I'm like, yes, I do. So there's that. There's lunch on me this weekend. But yeah, we're waiting on, I think now, going into next week, right? Let's say like, look at the news stream for next week here. US PMI, factory orders, ISM, that's on Monday. There's not much. Nothing on Friday. There's a minimal stuff scheduled in terms of economic news the next week. The week after, though, here's the next week, starting June 12th. You've got CPI on Tuesday. You've got then PPI on Wednesday morning, and then you've got the Fed and you got Powell. So you're going to have the rate hike or the pause, and then you got Powell's press conference. That should be a fun day. We'll have a live stream for that. It's on Wednesday. But that's the biggest thing, right? That's not next week. It's 2 weeks from now, technically. We'll be through this. A lot of shit coming out. A lot of shit, which is good. It's good. I mean, so next week could be chill on the news front, and maybe the market wants to kind of glide higher. I would say, you look around where we kind of are seeing some, I don't want to say pullbacks, but let's just look through like the large cap techs. Let's look through like some of the 1 hour charts. What you want to look for is stocks that are not at highs. Like Tesla went crazy. Tesla's like up towards highs. Apple kind of up there as well. Let's see. Microsoft, believe it or not, is actually not up towards the highs of late May, which sets you up maybe for a push into next week, the next leg or something like that of a move, which could be cool to watch. Nvidia kind of now in this consolidation mode above 405 gets interesting. AMD is definitely pulled back a good bit, so that's got to get back over 120s. So you look around and like some of the stuff has kind of chilled out a little bit. Some of it's going nuts. Google's kind of in this. Google looks like it could be setting up for a nice move here soon. Why? If it continues, you got a flag essentially just on the daily chart. Like, let's just draw that level in above 127 is your spot on Google. That happens next week. So you're looking for stuff that like what's kind of been consolidating that could set the next leg up and push the markets further. So that's what you want to look for. And if you look, today is not the strongest of days across the semis and across big tech. Tesla's up a lot, but outside of Tesla, Apple's barely even up. Microsoft's not even up 1%. Nvidia, AMD, Meta are all actually technically red right now. Amazon's up 1%. Google's not even up 1%. So you have a lot of potential heavyweight players in the S&P that could be the push for, if we get a pullback in, the Dow and whatever other stuff on the surface next week. There's those that could be setting up for the next leg. So that's what you want to look for. Just to kind of be ready for that, or at least, if you care, maybe you don't, but that's what I'm looking at least into next week. So watching maybe Google's chart looks pretty interesting. I'm going to go to some of the daily charts. Amazon's chart, not a huge fan. It just had a, big move and then it's pulling back. It's just in this kind of parabolic move. It could be good, but what I would want to see is it consolidate for a little bit, chill out, and then maybe set up the next leg. Meta, kind of the same thing. Big parabolic move here. Let it chill out for a bit. AMD has done that. So AMD, maybe it comes back and fills some of this gap in and then could set up a higher low for more if it's going to go for more. NVIDIA is kind of somewhat consolidating. Microsoft, a little bit of that. Apple, not really. Tesla's going for it. So not a lot, but there's some. They look pretty decent. Caterpillar's up 9% today. It's a beast, man. Caterpillar, look at that monstrous move on Caterpillar. Right off the zone, it didn't fill this entire gap up zone from back in October of last year. Thought maybe we'd see it come back down towards $200. It got close, held 205 and held that zone and had that's a massive day for Caterpillar. Does not move 8% in a day outside of earnings and big news days, but that's pretty crazy. Real estate ETF could have some correlation to your TMF since real estate in the 10-year. Yeah, that would be the thing, the real estate ETF, and then the 10-year. When the 10-year goes up, right? The 10-year yield goes up. You would think though, and it's not always perfect, right? But you would think that real estate would be coming down. Why? Higher rates, right? More pressure for people to get approved for loans or higher prices to pay for your house and whatever, right? So today's the day where the 10-year is up, but real estate XLRE is the S&P, I believe, real estate ETF. That's also up. So usually those are not like that. It's not perfect, but here's XLRE. Here's the real estate ETF. Here's this chart, which one could say, hey, it looks decent. Looks like a decent buy. Yeah, it's at support. It's not a bad buy. It's kind of got higher lows here too. Also though, technically speaking, at the same time, right, it is trending down, right? There's no break of trend. If this thing gets above 42, oh yeah, we're now breaking a higher high here, relatively speaking, and that has a much better bullish look to me. But not even close to that for now. So we'll see. And it's also kind of one of those macro things where it's more so of a hedge. It's not about, oh, this needs to be a trade. It's a hedge. That's really what it is. $25 from my work at ODP. Labor violation for not allowing cashiers to sit on shares. That's terrible. No, that's actually funny though. But yeah, I worked as a cashier at a grocery store throughout high school, and they didn't have chairs. We stood. I guess no one ever really asked though. 25 is $25. It is. AMC, no longer on PLTR, but still watching it. Let's see. What do we got on PLTR? Beast. PLTR is a beast. This is also just kind of consolidating for potentially another leg higher on Palantir, believe it or not. But I wouldn't buy that now because, hey, that's up a crap ton in just the past month, but still looks strong. AMC. That's funny. I haven't looked at AMC's chart in a long ass time. Jeez. One of the cleanest downtrends you're going to find out there. But, there's something going on. Here's the thing. You want to short AMC at 10. You want to short AMC at 20. Fine. You want to short AMC at 450? You're asking for it. I don't I don't know. This is kind of getting back to prices that it was like pre all this mess. Now there's offerings and whatnot and dilution. So I don't know how much that all plays into it, or how much that really factors into the stock, and how the pandemic and now all that now and earnings. Either way, AMC to me is like a no touch. It doesn't look bad though. I mean, it's technically got a higher low, 2 higher lows. If this higher low here is, but it's got some higher lows that are trying to be put in. So it's maybe trying to break this downtrend, maybe, but it's a tough one to break because that is a pretty large downtrend we've got. It's not like a perfect, you can't draw a perfect line to it. It's more of a, you have to more draw a zone. So something like this would be kind of like your AMC, like downtrending zone, so get up into like that $7-8 range and I would be concerned until that breaks. So it's got much quieter though, which is kind of good, right? It's quieted down. That said, right, maybe that's presenting a buy, right? And if you wanted to buy it, your risk is like $3.75. So you're going to risk yourself like 75 cents for ideally a couple dollar gain, like maybe back up to 7-ish. So that could be a pretty good trade. USB. So I want to cover call. Oh, banks are coming back, man. They're bouncing back today, at least for now. I mean, if you're going to sell a covered call, this is not a bad time to do it, right? Because it's having a massive green day. You want to be ideally selling covered calls on green days and selling puts on red days is what you want to do. That's another thought that I had too. Because in the Robinhood portfolio, like technically because of margin, we've got buying power of like $4,000. So what I could do and what I might do is, instead of buying, like I was thinking about buying ARK, right? To get some growth exposure once I sell SOXL or sell, some more of it. But instead of buying ARK, what if I said, screw that, I'm going to just sell puts on ARK. And the intention here is that even if ARK goes nuts and goes crazy for months, I'll never get filled, but I'll still capitalize on ARK, even though I never actually bought a share, because I had the potential by selling puts. Let's just check this out and see. So if I went out to, let's say, June 16th, 2 weeks out, and I was going to sell a 40, oh shit. No, I was looking at calls. What? I want to sell a 40, yeah, this is not bad. I could sell a 40 put for 55 cents. Now that's, $1.60 downside, and then I would have to buy it, but I'm getting paid $55 to buy it. If I want to be a little more conservative and maybe want to buy it, get a better dip buy it, or maybe have a better chance of not actually having to buy it, even though I would buy it under $40, I think that's a decent deal on ARK from what I'm looking at. Yeah, you can say Cathie Wood sucks, all this shit. I don't care. If I sell SOXL, I've got no growth exposure. So I feel with a heavyweight in Tesla, this would be a decent stock for growth exposure. There are better ones. There are probably better ones out there, right? But this comes into my price range. It fits. It checks a bunch of, not every box. It checks a bunch of boxes that I would like to be checked in terms of what I'm looking for. So maybe you can do that, right? And sell like, I don't know. Once I sell Soxel, I'll have better buying power or whatever, but I'll be able to sell like a 30, even a 39 put for 32 cents, which is $32. Now that's not a lot, but for 2 weeks, $30, if it never gets there, okay, it's $30, and I'll do it again. I'll do it again. And you can kind of stack up $30 here, 25 there, 50 here, and that stacks up over months if that's what I'm going to do, versus just buying the shares. And if the shares appreciate, it's kind of a similar deal, right? I mean, maybe you'll make more by having shares appreciate and selling covered calls. Yeah. But if I want to buy a deal and I want to be careful about what I'm getting into and being more selective on prices, selling puts on that or other stuff out there could be, an idea. Maybe even like an AMC. AMC sounds stupid, right? But AMC is $4. So you get 100 shares of this. It's not that much. If you were looking at AMC, go out to June 16th. What's the June 16th puts looking like? Let's see. You can sell a 450 put on AMC for 25 cents. Yeah, I mean, like, okay, if AMC it finishes above 450, okay, you made $25 per per 100 shares per contract. You can maybe do a couple contracts. Or you go to sell the 4s. I mean, this is even better. Sell the 4s for literally 9 or 10 cents. It's $10. Okay, fine. But I can sell a couple of those. And if, let's say I sold 3, yeah, it's $30. And if AMC comes down to 4, I'll buy AMC at 4. Maybe that's my thought process. I don't know. It's just kind of an idea. But you could do the same thing there, right? And I'd prefer to do that on stuff that's been weak, because selling puts on stuff that's been strong, you're not going to get the best deal. Stuff that's been weak, AMC hasn't been strong as of late. So you're going to get better put premiums versus if you were to sell puts on, anything that's been Palantir, right? That's been going crazy. Like, what's the point? That's my thought. So maybe we're going to sell puts. Maybe. But in the meantime, we got a decent, I think I'm positioned pretty good. I'm not worried too much about it. AMD, man. AMD though, if we do look at downside for next week, if there was a stock that I would say is my highest interest, it's AMD. Why? This big gap up, essentially just because of NVIDIA's earnings, not because of AMD's news. It's just NVIDIA's earnings. So this big gap to fill back down from about 116 down to about 110, 111, that looks pretty sick. So you go to the 1 hour chart and you'll see it a little bit clearer. It's like you're looking for AMD, if it breaks down below here, to get into some of this area right here. So juicy downside watch for me next week. If we see weakness in the market and you're like, well, I don't want to short all these other uptrending stocks. AMD, yeah, is bigger picture, is uptrending, but what's it doing as of late, past couple of days? Well, we've establishing potentially some lower highs. And if we start breaking down below some of these lower lows on the 1 hour chart, okay, now I can start to see a trend developing here, and you can kind of catch on and latch on there. And that's going to be your higher probability downside trade versus, shorting, Tesla, Apple, or all these other stocks that have been super strong. Could they come down? Yes. But when it comes to, in my view, probabilities, you've got a higher probability in an AMD short versus all the other names that haven't yet to really establish any backside. They've just been going up, right? So that's where my head would be at into next week on any shorts or those types of things. So we'll see. We will see. Netflix. Yeah, Netflix is another chart too. The only problem is I haven't checked the option chain of Netflix. I don't know how spready those things are. Let's check. We can pull it up. Let's go check it out. NFLX, Netflix options. If you went out to next Friday and you're like, yeah, Netflix 410s, they're not bad. It's just they're a little bit more spready than stuff that I have been traditionally trading, but not bad. Not bad. If you were to go out and say, hey, I want to buy a 405 or a 410 call on Netflix, a little bit out the money, right? Where is it at? Netflix? Yeah, it's $10 out the money on Netflix. Here's the chart. Yeah, so you got some decent charting of it. Spread is 10 cents on a contract that's almost $5. It's not bad. So could be something I'd be add to the arsenal one day if there's interest on it, but we'll see. TGT, DWN, and let's take a look. Let's pull up all those charts. We gotta take a peek. Target, with all their news that's been surrounding them, led a lot of the downside on the retail ETF. People asking Target, is it a good deal? Is it a good buy? And maybe it is. I mean, it could starting to get down to a point where this starts to become maybe a stock people want to pick up. I don't know. I haven't followed it super close, but that thing broke down nicely. Actually, you know what I haven't pulled up? I got my volume profile missing. I'm missing something. Yeah, it filled through this volume gap nicely, and it filled that. So after that, man, I mean, I don't know. There's no edge to me. if you had played it from the breakdown of 140, you would have had a nice move really before that. But below 140 looked good down to like 130. And it went to 126, and now it's bouncing back. So who knows? JWN, Nordstrom. That chart looks a lot better. Like I would say that's a better chart to want to buy a dip, because you can kind of see, hey, this thing has only been down to like 11.50, $12. It came down to 14. I mean, you're catching this thing in a downtrend. It is a downtrend. There's no proven change there. First step to break this pattern, though, would be what it's trying to do right now is break this lower high above like 1760, which is kind of where it's just at. Above that starts to get interesting, but then you're going to come into problems as you get up towards $20, because then you're starting to get up into the top end of its trending channel. And then, you know, how much, you know, you're betting at that point that you're going to get a change in the direction, which maybe happens, but if it's not an investment buy where you're planning on holding this because of all these reasons for X number of years, right? Then you are just kind of buying a downtrend, which, you know, how do you know it's going to break the downtrend? You don't. You just don't. Macy's. Yeah, retail, man, hasn't been doing great. Macy's got hit pretty hard here. Jeez. I just don't think I can wrap my head around buying Macy's stock in 2023. I just don't know if I could do it. You know, just like, I don't think I actually have been in a Macy's recently, do like a suitcase maybe, but that's the last thing I can remember being in a Macy's for. And even that, like, you could have just bought it on Amazon, or you could have bought it anywhere else, some online shop anywhere else, but was in the area and was like, oh yeah, we'll go check it out. But I don't know. I mean, this chart isn't great. And also, you are right at the level now where that was your prior bounce zone. So now you're back testing that. This would be, if you're looking to re-short or looking to short this thing, you would potentially short it here with a stop loss over like $16 as your risk for you know, a back test for the next leg down. That, like, it looks like it's just downside. I mean, today's a day where like retail is going bonkers because, you know, market's bouncing back pretty nicely and you're getting a lot of help. But big picture, like, would you want to long that? Unless you're looking, I would say for some of these stocks, you got to have a time horizon that's deep into the future, and not a trade horizon. Like a trade horizon, these things are not the best like looking trades unless you are a dip buyer specifically. Looking JWM short, looking weak. Yeah. JWN short. Yeah, I mean, as long as that puts in a lower high here or like holds this level, that would make sense. A bunch of these retail names could be good shorts if the market kind of cools off, you know, whatever. Yeah, like we've been in a mall lately. How's the foot traffic? Yeah, I don't know. I have not. That's for sure. AI's chart. Yeah, I mean, the thing is, I just like don't know how you could it's, if you're trading it, one thing, but like I just hope you're not just like randomly buying this thing as unless you got a really big horizon, then this really won't matter. Like if you got a massive time horizon, if you bought it at 30 versus you bought it at 20 versus if you bought it at like 13 and the thing goes to like 700 in 5 years or 10 years, like, you know, okay, who cares? Yeah, but if that's your time horizon, that's your time horizon. But realistically, this thing is just, it went on blow off mode. And what's it done every time it's had these kind of parabolic moves? It's pulled back nicely. So I would not be a huge fan of it, to be honest, until maybe this is, you know, if you're trading it, you want to see these higher lows hold. So like right now, $30, kind of want to see $30 hold on this thing, or else wouldn't be a huge fan. Yeah, retail, the I don't want to say the signs, but like retail just doesn't look good. Those charts don't look good. I mean, either there's something up or maybe there's opportunity, I guess. But something, because like trying to think about it, like, and I guess I don't like to think too much, because when you start doing that, you start playing all these games and then you get out of the mindset that you should probably be in the first place. But like, realistically, there's always a narrative that tries to get tossed on, like, oh, why is this up today or down today or whatever. Like, you'll find yourself trying to figure that out. And many times, like, that's the news and that's the media's job to come up with one to give you like a narrative for why a stock is moving, why this is happening, why the market's doing this. But realistically, like, it's price and it's price. Like, that's really it. People who go back and forth between this, like, you hate fundamentals, you hate technicals, you hate this, you hate that. Like, there's definitely a blend. I prefer not having to think about the way that I'm much more of a technical chart focused and not fundamental focused person, and just in general. And so there's something wrong with that. So you want, personally, play to the strengths. If you're looking at it and investing, and that's just coming through learning it, right, over the years. My investing strategy now is much more funnel stuff into long-term dividend diversified ETFs that will pay me dividends, that maybe, and then sell covered calls to cash flow those things to improve the dividend, to, potentially, and play the long game, the dollar cost average long game, buy it every month, and that's it. Who cares? Set the automatic deposit up, and that's it. Play that game, and then trade based off technicals. That's it. So, and know that I'm not going to be right all the time. If I can be right 60% of the time, that's sick. If I can be right 80%, that's amazing on a certain pattern. But play the patterns, play the technicals, and trade off of those things. But invest and position yourself in a portfolio in a much less, I guess, narrative-driven or media-driven, or I guess narrative, because you can make your own narrative-driven manner, where, like, again, like, it's the whole, you can think about the short squeeze narrative. That was a whole thing for a while. You can think about, oh, oil because of the war and this, and like getting caught up in these things as stuff is going crazy. Oh, the bond trade yields. Like, do I want to go, like, would I want to go short bonds right now, which would essentially imply that I think yields are going to go a lot higher? Probably not. That trade has been going on for months and months and months and years now, I guess, technically. I don't want to be buying that shit at the top, but I much want to be more of a contrarian on those things. That's where my head's at. How about SPY? SPY killing it today. Killing it. Bag on GPS spot because of Kanye. It's funny. I actually put on, I had a pair of Yeezys that I bought a while back that I really didn't wear that much. And I have a pair of Air Force Ones, a pair of really old soles destroyed, like, Nike running shoes. And then I've got, like, my running shoes that I used to run every like couple days. And then, like, that's kind of it on my shoe front. And I'm like, geez, man, every step, and then I had flip-flops. Every step that I take is like just radiating up my bone on my right leg. For whatever reason, that leg is like, I got to stretch it out. And I've been doing some stuff with it lately, but it's been hurting. So I put on the Yeezys today, because I remember like, okay, when I wore the Yeezys, when I first got them, like, I just remember thinking, oh man, the cushion felt great. Like, that, just the sole, like, it just felt really nice. Maybe that's because it was new, right? It's a new shoe. So I put those on today. It felt great. I went to the gym today. It felt really good. And the legs thanked me, which was funny. But yeah, GPS doesn't, I mean, hey, it's bouncing now. Would you want to short this thing? In my opinion, for a big picture swing trade? No, I mean, the thing is relatively, if it gets back up into the teens, maybe. GPS dividend is 7.3. Oh, that's 7.4. That's pretty good. That dividend yield is nice. I'm seeing a 7.43% dividend. MMVPR came out at 837. That's funny when, like, you get those random time PRs, because everyone always expects them on the half hour, on the hour, on the half hour. Bought some 70 PayPal calls expiring September. You know what? PayPal is another stock that I was thinking about. The only problem was that I don't think I have the buying gear. It's just a touch out of reach, and I don't really want to, and I also don't want to get individual stock exposure like that. So it wasn't like, if I'm going to get individual stock exposure, they're going to be cheaper in the portfolio. The Robinhood portfolio is like 10K, 10.5 now. And I'm going to potentially soon have like a couple $1,000 more of buying power. And so I will have like no growth exposure. So I've been looking for growth, and PayPal could be one of those stocks that fits that bill. But things have been getting hit so hard. You know, you look at it from a longer term perspective. If you have any thoughts on it, like, it might be something to think about. So I don't dislike those September call ideas. And hey, of course, market gets crushed. You know, this thing can come right back down and go 50s, 40s, you know, for all we know. But hey, market bounces, or the market kind of holds up. PayPal I could see it bounce. Human nature to figure out people what's happening. So people try to tend to make something up. Realistically, market's probably pricing in something. Yeah, I mean, that's we all look for, it's confirmation, right? It's confirmation and bias and whatever. We all look for something, a reason or this or that as to why this is happening. And I think the biggest thing that I have kind of realized, I don't want to say it's the biggest thing in trading or whatever, like, it doesn't necessarily matter, but if you are looking at like trying to always understand the move of something, I mean, you're just setting yourself up for failure, because you could do that and also ingrained in you know that like there's no guarantees, right? That's fine. But I much prefer just looking at the charts and just being like, hey, this level breaks, this is a prior respect, that should trigger a move. It either happens or it doesn't happen, and then understanding based off of trying things what you're good at, what has a higher probability, and okay, like knowing like, okay, why did this happen? Well, I don't know why this happened. I'm never going to actually know why. All I'm going to know is that this happened, and that gave me that gave us a higher probability of this happening, and this tends to happen more when this happens, so I will do this. It sounds weird. I know it's confusing, but like, that's just a much better way to approach like trading than trying to think or make sense of it. Because you can go and try to make sense of the AI trade, and you can make sense of this and that. But like, you know, who the fuck knows? Like, there'll be times where it just doesn't make any sense. Like maybe retail, you're like buying the dip on retail the past like couple weeks, like buy, why is it going down? And it just keeps going down. And you can't put a narrative to it. It doesn't make sense. And you're sitting there buying the dip because your narrative is bullish, but price action is super bearish. You can't control that. Sometimes it just stuff doesn't make sense. And that's, I don't know. That's just one example that you could be kind of thinking about. At least in pre-market, you're expecting the drop on the bottom of the hour. Yeah. You would think. T-Mobile and Verizon are down because Amazon wants to get into wireless. Oh my. Well, that'll definitely tank your stock, right? Or you'd think it would. T-Mobile's down. T-Mobile, man, at where it's at right now, another one of those stocks that could be worth selling some puts. What are we thinking on T-Mobile? Not Tron. Freaking Tron. AT&T. AT&T. Trade options. Go to sell puts. Go out to June 16th. 15 puts are 20 cents, 14 50s are 10 cents. I mean, it's another one of those ideas just to keep in the back of your head, because why? Because the stock also, if you want to do some research into it, the stock pays you a freaking 7% dividend. You're buying it at relative lows after some negative news. Sell some puts. Puts are pretty juicy right now. You can sell some puts maybe. Maybe it never fills. Maybe you never actually get exercised, and you just make a few extra bucks, a few bucks a change right there. Could be an idea. Market close. Options trade after hours. Select ETFs do. Options after. I can probably find the list. There was, I forget what the link was. Yeah, there was a link somewhere that I had that gave you a full list of all the stocks that trade options after hours. If you go on Robinhood, I know that they tell you, if you go on Robinhood, oh, here. Yeah, here they go. Here are the late close options. I'm going to screenshot this too. You could, or just look up the same link that I did. But it's a bunch of ETFs, and essentially you could trade these for 15 minutes after the close on these contracts. You know, so if you were looking at like a bunch of like the big different sector ETFs, the S&P, QQQ, the VIX, a bunch of that stuff, you can trade all these guys options after hours, but like not individual stocks. So kind of a cool thing. Robinhood just recently allowed that on their platform, because I know you used to be able to do it on TD Ameritrade for a bit, then Webull, and then now Robinhood allowed it, which is, you know, a matter of time. But yeah, pretty cool. Not that I really would say it's worth it. Although when you get some of these earnings reports, you can trade SPY options or whatever options after QQQ options after hours off of some of these earnings reports in the tech space. You could technically just scalp. I mean, it's not my game, but you could, you know, and have 15 minutes to do it. We're looking at Verizon here next. Yeah, that chart looks gross too. Yeah, I mean, that thing's at, yeah, Verizon, look at Verizon's dividend too. Verizon's a 7.3% dividend. A more expensive stock price-wise than T-Mobile. But yeah, I mean, Verizon, same thing. I'm sure that the covered or the put cash secured put game would be a decent idea. Sell a put out to June 16th on Verizon. If you want like a sell like a 34, paid 40 cents for that. 33, I'll still pay you 18 cents. These are pretty decent, you know, and selling those. So some ideas for next week. That is for sure. But with that said, hope you guys got something out of today's stream. Hope you guys enjoyed. Hope you have a great rest of your Friday afternoon and a great weekend. Get outside, do some fun. And the plan is for next week, Monday or Sunday night, we'll plan to do a live. This past week has been tough with the dog schedule and stuff, but we're getting back into a better schedule. But we plan for a live on Sunday night, hopefully. And then Monday, Wednesday, Friday, Power Hour lives like usual. The week after that, we're going to maybe have one or two extra ones because we got Powell's press conference, we got a CPI, we got a bunch of stuff that's going to be important and pretty cool to watch out for. Just got a commercial on your stream for the first time. You know, YouTube, I think I could probably I got to check the settings, because YouTube, I think, has recently released mid-roll ads inside of lives. I don't know if that's a big deal. If it becomes a big deal, I will look into the settings of that, because that doesn't need to be done. But I think I got an email or something like that they allowed that. So that's funny, because I have a button right here that I can hit. I'm curious if I hit this button in a second. I'll hit it before I wrap it up. That says insert ad. I don't know if I've ever actually done it, but if I hit that button, it will technically insert an ad. Let me do that right now. But with that said, thanks so much for watching, and I will see you guys next week. Enjoy. Here's the ad. I don't know if it works.